Thanks to everyone for joining in, and welcome to the AgVic Irrigation webinar series. Today's webinar is on the Goulburn to Murray trade and Murray delivery risk. Quite topical at the moment, just given the release of the Goulburn to Murray regulatory impact statement, recent MDBA reports on Murray River delivery risk, and quite a bit of interest from irrigators at the moment in intervalley trade. My name's Rob O'Connor. I work with Agriculture Victoria based at Echuca and currently working from home. Just in terms of housekeeping, letting you know that this webinar is being recorded. The recording will be sent out to registered participants probably in a few days' time. It just takes a few days for us to get the video approved. If you do have any technical issues, please contact John Paulette. The easiest way to contact John is through the Zoom chat function, and if you select host, that chat will go to John. If you have any questions through the webinar, please use the Zoom chat function and select co-host. Your question will go to me, and I will raise the question with our speaker, Joe, either at question time, which could be during the presentation, depending how we're tracking for time, or at the end of the presentation. Thanks for those people who have already sent in questions. Hopefully your questions will be answered during the presentation or during the question session. I can put those questions to Joe if they haven't been answered already, or you can send them. Questions to the webinar topic will be prioritised, and at the end of the presentation there will be a survey about the webinar. So if you could complete that survey, that would be a huge help. We use your feedback with funders just to provide evidence, and hopefully they will fund us in the future to run similar events. We aim to finish the webinar at 2 o'clock. Just a thank you to our supporters, the different CMAs in Northern Victoria: Goulburn Murray Water, Regional Development Victoria, Plan to Farm, AgVic, and Department of Environment, Land, Water and Planning. Our next webinar, which will be in late April, is about securing your water for the future, harnessing carryover and other water products. So at the moment there's a good opportunity to capitalise on cheap water and to set yourself up for next season and beyond. So that will be the topic of our next webinar. Today, our speaker is Joe Banks. Joe's a Senior Manager, Retail, Water Market and Entitlements with DELWP. Joe and his team have been overseeing the Goulburn to Murray review, and they also have been leading Victoria's work on the Murray River delivery risk. Joe's currently up at Mildura, where he's been talking to irrigators for the last couple of days on this very topic. So I'll hand over to Joe.
Thanks, Rob. Thanks very much for having us and hosting and organising this. And thanks to everyone who's tuned in as well. Good chance to talk to you guys about this stuff. We think it's pretty significant. As Rob said, the major focus of today will be this Goulburn to Murray trade rule review, which the Minister has just released a regulatory impact statement on, but we do want to take some time to ground that within the wider Murray delivery risk issue. So to give you a bit of an introduction to that and the issues we're looking at that there and how Goulburn to Murray trade fits in. So this first graphic I'm going to show you is a very simplified summary of some of the key things that we've learned have been changing across the basin and what we need to think about in terms of the implications, both for water users and for how we manage our water. There are, in simple terms, a number of key things which have changed over the last 20 years. The first of which is that the capacity of the Barmah choke itself has been reducing. It's reduced by about 20% since the mid-1980s. And that is the amount of water that river operators can push through the choke during summer without going over bank and flooding the forest and losing more water along the way. So it's gone down. Regulated releases from Yarrawonga from previously about 11,500 megalitres a day, now more like 9,200 megalitres a day. That's significant because delivering water to the lower reaches of the Murray below the Barmah choke, most of it, or much of it, as you know, comes from the major storages above there. So it is an important constraint on operations. The other key change we've been seeing in terms of our capacity to supply water users and entitlement holders in this reach is less frequent access to water in the Menindee Lakes for the joint operations of operating the Murray River. When Menindee Lakes is above a certain threshold, water there is shared between Victoria and New South Wales and is used as a shared resource to supply commitments in the Lower Murray, including South Australia. Over the last 10 to 20 years, we've seen that less frequently available and less frequently available to support some of those Lower Murray deliveries, and the less water that we can supply from the bottom end of the system, the more we have to push from the top end of the system through the Barmah choke. So the little points there, back in the 80s, which admittedly were wetter, about half of those years, a bit less, we were able to supply approximately half of South Australia's entitlement flow through the summer months from the Darling itself, easing pressure on the choke. In the last 10 years, since 2009 to 2019, that's only actually been 2 years out of 10. The other key things we wanted to touch on are the changes moving from supply to the changes in demand and how water is being used. We've seen a couple of key things there. I'll touch on these some more in a minute. That's that irrigation demands in Victoria and New South Wales have largely been sustained from historic levels of use. They haven't necessarily gone up in the whole reach, even though irrigation has expanded in some regions and declined in others. But more importantly, they also haven't gone down post-basin plan water recovery for the environment. And on top of that, environmental water holders now hold about 25 or 30% of the entitlement in the Murray below the Barmah choke, and they deliver some of that water too, both through winter and spring and through summer to meet environmental demands in the lower end of the system. To support that sustained irrigation demand particularly, we have seen significant growth in trade from the tributaries, both the Goulburn and the Murrumbidgee, and deliveries from those intervalley trade accounts in the tributaries have in recent years exceeded regularly 300 gigalitres a year from the two sources, whereas before 2014-15 it was more like 100 gigalitres a year. And we've seen particularly why this Goulburn to Murray trade review is happening. That's starting to result in negative environmental impacts, particularly in the lower Goulburn over summer. I'll just show you a bit more about that demand side of things through January to April. So this is a graph that is in this joint report that the three states and the MDBA put out recently on managing delivery risks in the River Murray system. It shows the amount of water delivered in the Murray downstream of the Barmah choke between January and April across the last 20 or so years. The first thing we wanted to make sure people understood was the commitments to deliver South Australia's entitlement flow at the SA border. That's a relatively fixed volume in average years, as this graph shows, about 700 gigalitres a year, so quite a substantial volume. It is less in extreme drought years like the Millennium Drought, like the upper states. They receive less water when water availability is very low. It can be a bit more or less depending on trade patterns, but it's a pretty consistent volume. On top of that, the purple bars here show the diversions, consumptive diversions in Victoria and New South Wales. And if you look at that, really, setting aside the millennium drought, the key thing for us is the level of diversions back in the 90s compared to now. They're not really so different. That level of irrigation demand has been sustained. And when you add the last piece of the puzzle of all the things that we are delivering to the Lower Murray through January to April, deliveries for environmental water needs at South Australia, that's additional water on top of that. When you take a step back and look at all these things cumulatively, you will see that overall, we are generally delivering higher total volumes to the lower end of the connected system than we have in the past. 5 of the 6 highest delivery years have occurred since 2012-13. Important to note, that's not saying that there's necessarily additional water coming through the choke or being taken from the Murray system. Entitlements in the Murray system, like others, are capped, and some of that sustained growth in demand is being met by trade from the tributaries. So the last part of this graph we show is the volumes of IVT, intervalley trade, delivered from the Goulburn and Murrumbidgee through that summer period, which really highlights that growth over the last 10 years. To summarize all that, the key things we've been learning about delivery risks. Delivery risks are real and they're likely to increase in the future, possibly more with the effects of climate change. We are delivering more in total and our supply and capacity supply is reducing from a few key points. So in Victoria, we've been doing a couple of key things about it. As you may well be aware, the Minister for Water has called in new works licence applications in Victoria and is closely assessing applications for new extractions and extraction shares. And extraction share in the Victorian context is a water user's right to a share of water during a ration. And that's the key thing that will be used for sharing access to water if we have a delivery shortfall. We're working closely with the other states, so that joint report I mentioned, managing delivery risks in the River Murray, is an output of that work, but we're working with them and the MDBA on our behalf to understand options to address lost capacity in the system. We're making sure we're starting to get much more information out to irrigators in the community to understand the risks and to have a discussion about this. And in the context of Goulburn to Murray trade particularly, we're making sure we get those trade rules right, particularly from the tributaries, so that traded water doesn't increase delivery risks or damage the environment. More broadly, within the connected Murray system, we are also looking at how we can optimise how we run that system within the ecological tolerance of it to mitigate those risks. That last piece of the puzzle I talked about, intervalley trade deliveries from both the Goulburn and Murrumbidgee have increased, particularly in the last 5 or 6 years. And there's been more reliance on the Goulburn in recent dry years. So this graph just shows you the total volumes delivered from the Goulburn and Murrumbidgee IVT accounts each year. The Goulburn is in blue, the Murrumbidgee is in the purple colour. So you'll see before 2014, that was generally about 100 gigalitres a year, generally water from both sources. Since 2014-15, generally more like 300 to 400 gigalitres a year. And again, that often comes, people buy and sell water from both valleys, comes from both places, but in 17-18 and 18-19, particularly with the drought in New South Wales, you saw a real concentration of that trade and delivery from the Goulburn River, and record volumes, 300 over 400 gigalitres delivered from the Goulburn intervalley trade account, which started to cause some significant environmental consequences. And that's why we've really made a focus of looking at this Goulburn to Murray trade review. Why that causes issues, those high levels of delivery, this just shows you the pattern in which that water was delivered in the large volume. This is a graph that shows in the green a modelled approximation of what flows in the lower Goulburn River would look like without river regulation and a more natural regime. So it shows much higher flows through winter and spring as you'd expect, and then over summer flows really drop off and you see much lower flows with a bit of variability through the system. The way we have managed the river and delivering IVT through that year in reality in 18-19 is shown in the blue. And if you look at that, you really see that sustained block through December, almost through until the end of March, with a bit of a gap in there, of delivering those sort of sustained unseasonal high flows up and around 3,000 megalitres a day, and really at a pretty constant level. And those sustained flows are really what's caused some of the environmental damage we're seeing in the lower Goulburn River, like that picture on the right, chipping away at the bank, starting to undercut it, causing erosion, and ultimately you start to see bank slumping and deterioration of the flow-on environmental conditions of the lower Goulburn. I was just going to pause a bit there because I know it's a broad audience. I did want to just take the chance to introduce people to what these inter-valley trade accounts are. The IVT account, inter-valley trade account, records all the water owed from the Goulburn to the Murray system, and a few things go into it, right? So things that increase the balance, that increase the amount that the Goulburn owes to the Murray, whenever someone trades allocation from the Goulburn to the Murray, whenever someone uses water from a Goulburn entitlement or account that's tagged to the Murray, as well as allocations to legacy commitments. So before new season trade every year from the Goulburn, there is also about 140 gigalitres potentially of water that the Goulburn has to supply to the Murray to underpin Murray entitlements as a result of some legacy ways we used to manage trade and previous water management decisions around recovery for water to the Snowy. So all those things add to the balance of the IVT account. The balance comes down as water is delivered from that account to the Murray by river operators. It also comes down whenever water is traded back into the Goulburn system from the Murray. And it can also come down if lake yield and spills, if there's water in the IVT account that hasn't been delivered yet. So that's the account itself. The current trade rule, which many of you will be interested in, is effectively a rolling 200 gigalitre trade limit. So that applies whenever the balance of the IVT account is greater than 200 gigalitres, trade is prevented. Whenever it is drawn down below that, more trade opens up. So I wanted to introduce that early on because it'll be important for the concepts we talk about in options for future trade rules. With that environmental damage I talked about having seen in the lower Goulburn River, particularly in 1718 and 1819, the Minister has taken a couple of important interim steps while we work on this long-term review we're talking about today. She has implemented interim operating arrangements over summer and autumn to restrict further damage. So that was asking the MDBA to not deliver more than 50 gigalitres a month in 1920, and aiming to not deliver more than 40 gigalitres a month this year, which the Murray-Darling Basin Authority has largely been able to manage to. She also introduced in November 2019 some interim restrictions on the use of water from tagged allocation accounts, so that when trade limits are closed, so too is the ability to use water from those accounts. Prior to then, any water used from tagged accounts was not subject to the Goulburn to Murray trade limit. So this was a key step in providing a more level playing field in the market and reducing the amount of total water owed from the Goulburn to the Murray system that needs to be delivered. With those in place, we've been doing this work on the long-term review of Goulburn to Murray trade and operating arrangements, and we've just released this regulatory impact statement for public consultation. So what a regulatory impact statement does is it's where we thoroughly look at the issues and the impacts we're worried at, the alternative courses of action we could take to deal with that, and the costs and benefits of those. And part of that process is putting all that clearly on the table for public consideration and feedback, and taking feedback on that. In Victoria, to change such rules, which are effectively legislative instruments, that is a requirement to make changes to things. We have to conduct a regulatory impact statement to justify and test why a change is needed and what an appropriate change is. So the overarching objectives for this review, and therefore the regulatory impact statement, is to identify long-term operating rules and trade rules that support a sustainable working Goulburn River. So what those words mean really is to look to be able to operate the river within ecological tolerances, but within that to maximise trade opportunity, and in a way, ideally, that doesn't increase those delivery risks in the Murray system. It does include a few of these components we're looking at, and today I'm going to talk you through a bit of each of those. It includes looking at operating rules for the lower Goulburn River, and those have been informed by work we're doing with a panel of scientists, a risk assessment for different flow regimes for the future. Marrying those to options for a future trade rule that we've really gone away and refined since the first round of consultation on this last year. We do also look at alternatives for how we can deliver water and potential infrastructure options for delivery of water from the Goulburn to the Murray as well, to make sure we've looked at everything. And we look at the potential impacts of all those options: economic, environmental, cultural, recreational, and Aboriginal values as well. The regulatory impact statement does include a few different options. It does obviously recommend a preferred one, which we think strikes the balance right between all these objectives. It also covers making these interim tagging restrictions permanent. That's subject to the RIS2. And as well as trade from the Goulburn to the wider Murray, it also looks at options for trade from the Goulburn to the Broken Creek, which is a regulated part of the system, which is effectively treated largely almost as part of the Murray system. So we need to get the rules right for that part of the world too. This regulatory impact statement builds on some consultation we did last year. As I mentioned, we were out early last year, well, not so far out. We got a couple of face-to-face sessions in, then COVID hit. So we did most of it through 31 webinars. A summary of that's on the Engage Victoria website. We got a lot of feedback, obviously. People were concerned about introducing changes partway through an irrigation season. That's partly why our Minister announced back in August last year that nothing would come into place during this year, and we'd be back out with the public now, talking to people about the future for next year and beyond. We got heard very strongly to look at infrastructure options and all possible alternatives for how we can manage this risk. We got told a lot of concern to make sure that changes do not increase those risks of water delivery shortfalls. We heard a preference from people that a rule needs to be a bit smart and balance seasonal trade flexibility with that environmental protection. And unsurprisingly, we heard a very strong preference for face-to-face consultation where we can. And look, at the moment, as Rob said, we're starting to get out to small groups face-to-face. We'll be doing a fair bit of that over the next 5-6 weeks, and using opportunities like this to get to people through webinars to talk about this and give them a chance to understand it, give us feedback, make submissions. So what we want to achieve in line with those overarching objectives for the RIS that I mentioned earlier. The key things we want out of this are operating rules that prescribe how water can be delivered out of the Goulburn, keeping flows lower over summer and autumn, and more closer to those sorts of patterns of natural variability rather than sustained constant high flows. We need trade rules that match the operating rules, so that we effectively only open up trade from the Goulburn that we know can be delivered, and delivered in a way that doesn't damage the river or create delivery risks in the Murray. We want tagged use regulations that keep tag use in line with trade rules and avoid it becoming a loophole around. We also want to have a discussion about removing tag use exemptions where we can. So for example, some of those grandfathered tagged entitlements that many of you may know about under the Basin Plan. And we also want to make sure we've got clear arrangements for the lower Broken Creek customers and their tag use in the future. We also do want to look at identifying infrastructure options that should sensibly be pursued for better long-term outcomes. So let's talk about what our preferred option or package of those things looks like as identified in the RIS. This is just an intro, and then I'll talk you through each of those. But in terms of the operating rules, we are recommending one that prescribes lower variable base flows, averaging more like 1,100 megalitres a day. But on top of that, with 3 short pulses through the year, fortnight long, up to about 3,000 megalitres a day is the current operational constraints of the Goulburn River, and dropping back to those low base flows for extended periods between. We want a trade rule that will effectively operate in 2 parts, with a rolling limit through winter and spring, a bit like the current one, but probably with a slightly lower threshold, turning into a fixed net trade limit over summer and autumn that will be confirmed, the volume in December each year that allows that IVT balance to be drawn down each year. We want tag use restricted in line with allocation trade. We would like to see restriction of these grandfathered tags over time. For the Broken Creek, The Broken Creek is a particular challenge because it's been regulated and is treated part of the Murray water system, but a handful of customers in there at the time of conversion still held and chose to hold Goulburn entitlements, and so they could be particularly impacted by this change to Goulburn to Murray trade arrangements. We have a bit of a unique opportunity through the Connections project to get everyone on the creek on a level footing. So we want to look at an opportunity to give those remaining customers the chance to exchange those over for Murray water shares so that they can use the entitlements that have always been linked to their property without restriction like everyone else. We are also interested in looking at a specific rule for water use and water use from tagged accounts in the creek, because water can be delivered there without going down the lower Goulburn River through the East Goulburn main infrastructure. And why we're looking at that is, again, that overarching principle is wherever there's chance to not restrict trade more than we need to, we should look at it. Lastly, and importantly, one key thing we do want to look at is to pursue moving some in-channel irrigation pumps in the lower Goulburn to the top of the riverbank. And what that would do would allow us to deliver those 3 pulses I talked about up to a slightly higher volume of about 6,000 megalitres a day in line with the operating rules, which means we could deliver more water and allow a bit more trade opportunity while still remaining within the environmental objectives for the operating rules. I'll just touch on that one some more and why we've picked that one as the one really to focus on in terms of that sort of infrastructure, smarter ways we could operate one. So we looked at a few things. We looked at the question of, could you do something to protect the banks of the lower Goulburn River from those erosion impacts I talked about? In reality, what that means is sort of rock beaching to prevent erosion. You could do that. The challenge is the lower Goulburn River is a very long stretch of river. It's about 200 to 300 Ks. It is also contrary to the wider environmental objectives we want to achieve. So while it would prevent erosion, it would effectively replace a lot of that vegetation on the lower bank, and you'd see a very different river system from the natural one we're trying to look at. We've also looked at the ability to use other existing delivery pathways in a more flexible and greater way. The reality is we already use the lower Broken Creek and the Campaspe River to deliver volumes from the Goulburn into Valley trade account to the Murray. We intend to keep doing that, to keep using those within the capacity available to them, but we're effectively running those at the limits of what environmental managers recommend already. So we are not proposing to increase those and shift environmental problems elsewhere. We'll keep doing what we're doing. We'll keep monitoring how those systems are going and whether that's creating any impacts. We also looked at 1 or 2 options for new delivery infrastructure, particularly options to enhance or reinstate some channels through the Rochester system west of the Campaspe. The reality is those things are expensive and challenging and will take a long time. We don't think they necessarily deliver a lot of value, but as I said, the one we think really does potentially deliver a lot of value is looking at moving these pumps in the lower Goulburn River to give us a lot more flexibility in how we can operate and deliver water. You can move those pumps from within the channels up onto the riverbank. That gives a lot more flexibility in how we deliver water. The operating rules themselves, so they're meant to be rules that are followed by river operators to ensure all water deliveries down the lower Goulburn River through summer and autumn are within the ecological tolerances of the river. I mentioned before 1,100 megalitres a day base flows with some pulses. This is just a graph that shows you what that looks like and why. It focuses on that summer-autumn period. The green line, again, is that sort of more natural river you'd expect to see without river regulation, so dropping off at the end of spring. Lower flows, but with some variability through summer and autumn without dams and weirs. You'd see some of those rainfall events come through. You'd see pulses every now and again. The blue shows you how different it has been in recent years. And the goldish line shows you how this operating rule is proposed to work. So it includes a low flow period at the end of spring through November, which is really about allowing the riverbanks to dry out, the vegetation on the lower riverbanks to establish and get a bit robust before summer. And then once you've had that establishment for 6 to 8 weeks, you can deliver a brief pulse, wet up the bank, not keep it submerged so long so the vegetation remains intact and can recover and continue to grow as you run another dry period after that from December through to January. And you can fit in another couple of pulses through that through the summer. The solid line shows what that means going up to 3,000 megalitres a day, which is the current operating threshold with some of those pumps where they are. If you raise those, as this says, you could go higher with those pulses up to 6,000 megalitres a day without creating additional environmental impacts, because you're not necessarily keeping that vegetation submerged for longer. You're just wetting up a bit more of the bank and getting the water off and back to those low flow periods at the same time as you did. So the little graph at the top right, I won't show you, but there's a bit of science that's gone into how you operate to manage to those pulses as well, to get the water out, manage the rates of rise and fall to not create erosion issues. I'll just look for people who live on the lower Goulburn River just to give people a bit of context of what that difference between 3,000 and 6,000 means. This is at McCoy's. We can give you some stuff at different gauging stations. 1,100 megs a day, that's about 1.5 meters on the gauge. 3,000 megalitres a day, that's about 2.5 meters. 6,000, that's up almost to 4 megalitres. It's still actually well below the bank full capacity of the lower Goulburn River. So we're not talking about going up above bank. We're not talking about creating flood risks. The minor flood level on the lower Goulburn is about 9 meters. So it's still well within capacity of the river channel. So the next bit, a trade rule to match those operating rules and how much can be delivered. As I mentioned, we're interested in that two-part trade rule and tagging restrictions to match that operating rule. The first part I mentioned through that rolling winter-spring period, July until mid-December, we propose that the rule should be whenever the account balance falls below 190 gigs, it's currently 200, 190 gigs, more trade opportunity becomes available. That 190 will include those legacy commitments I mentioned earlier, which are set aside at the beginning of the year. The 190 is based on how much you could currently get out if we were operating to that proposed operating rule with pulses to 3,000. It's there so that if you've got 190 gigalitres in the IVT account, once you reach that mid-December period, you're confident you can get all that water out through the rest of the year. The second part, beyond mid-December, as I said, will cap trade opportunity for the rest of the year to make sure that the total volume of net trade does not exceed what can be delivered across the course of the year. So why we prefer it, those who are part of the first round of consultation, we called this type of rule the dynamic rule. Just if you remember that, we've gone away and refined it since. We suggest it's preferred because it does match trade opportunity to what can be delivered each year. It does also, which we'll show you in some example, enable a bit more trade to open up in drier years when those full legacy commitments aren't required to lower Goulburn allocations. And with the rolling part through winter and spring, it does provide some seasonal flexibility to respond to conditions and delivery risks in line with what we heard during initial consultation. The tag use rules to match that, look, generally we want tagged water use restricted in line with trade limits. We do want, currently there are some grandfather tagged entitlements. So these were arrangements that were established before November 2010 that under the basin plan are currently exempt from any restrictions under such rules. We would like to see those grandfathered tags restricted over time. In the first instance, we propose that should be whenever these individual grandfathered ones change ownership or where the water is used or how much entitlement is held. We want to seek feedback on that. We would also like feedback on an alternative faster transition to restrict all grandfathered tags in Victoria. That's a wider discussion that's been going on with the ACCC and the other states as part of their water market inquiry about whether we really should enable these grandfathered tags to effectively endure for eternity. So our minister, you may have seen, has been quite clear that that's one of the things she's wanted to see changed in the basin plan and for the ACCC to address. They are considering that, as I understand, and we expect that may be part of the final report of the water markets inquiry, which I think we expect to be due out soon. So why is this significant? Look, in Victoria, Goulburn to Murray, these grandfathered tags have amounted to about 17 gigalitres of use this year. That's when trade opportunity was closed for everyone else. So that means less trade opportunity for other water users. There's some numbers in the regulatory impact statement. There's about 20 water users with these things. So it's not many people, but it is quite a significant volume of water. And that's heavily weighted towards one or two. So there's some pie charts there at the bottom that just shows the balance of how this is held. I did want to take a chance to talk through sort of how we've compared all the options assessed. So I've talked a bit about our preferred set of options, but I did want to talk a bit about how we got there and the other things we've thought about. So this next table, I'm just going to talk you through the differences in the outcomes under the preferred options compared to the base case of no change without a regulatory impact statement, and then show you some of the options that are in the RIS and have been considered and why they're not the preferred ones. So the base case again, no change. We are back to the trade rule we have now. We are back to tagging being unrestricted as it was before those interim measures in 2019. And we are back to no operating limits in the lower Goulburn River beyond the current 3,000 megalitres a day restriction on operation. So you might see average flows like we saw in 1819 consistently around 2.5 to 3,000 megalitres a day, much more frequently in the future. The advice we've had from environmental scientists, if you start to see that more frequently, you will start to see significant environmental damage. The trajectory is quite clear in terms of bank conditions, long-term erosion, bank slumping, and the associated environmental outcomes for vegetation, fish, bugs, etc., that depend on that through the river. We tested with these scientists the likely environmental outcomes of the proposed operating regime. So that's option 2 there, with those lower base flows around 1,100 megalitres a day, the pulses, either 3,000 or 6,000. And the advice from that is, at that sort of flow regime, we expect that we'll be able to avoid further damage to the lower Goulburn River. And we expect that they will provide some opportunity for long-term environmental recovery from what we saw in recent years. We actually talked to this panel, we put a range of scenarios in front of them to test the bounds of the sort of environmental outcomes we could see at different flow regime. And those options are shown in the RIS. So I'll just show you a couple of the others. We also looked at an option for base flows which are lower still, so lower summer and autumn flows, and just one of those pulses. So that's base flows at about 940 rather than 1100, and just one of those 3,000 megalitres a day pulses. The advice from that will also avoid further damage. It does provide greater opportunity for environmental recovery than the one we've recommended. So, and beyond this table, when I get to the outcomes under trade opportunity and some of the other things we have to consider in the RIS, you will see that that one, while it will provide better environmental outcomes, would result in significantly reduced trade opportunity compared to the preferred one. And so that's why that is not the recommended one. We also looked at an option 3 here for higher base flows, so more like 1,300 megalitres a day, making those pulses monthly. And the advice back is that results in a much higher risk of further damage and really no opportunity for that long-term recovery from the damage we've seen. And that's to do with both the higher base flows, but also if you're running a pulse every month, the banks never really get a chance to dry out, the vegetation never gets a chance to establish. So that one's not recommended because of the significantly higher environmental risks. Those are all other operating rules we could put into place. We also have one more, which looked at an alternative trade rule. This is an option for a different way we could deliver that traded flexibility. Through the first round of consultation, we had an option around whether we could do that by allowing effectively unrestricted use from tagged accounts through winter and spring, when it's not such a problem to deliver water, and then cap that off through summer. We don't recommend that option because it would increase delivery risks in the River Murray system. And the reason it would do that, we think in the long term, what people will do is meet most of their irrigation demand in the Murray from water tagged from the Goulburn system, keep all their Murray entitlement water that they used to have delivered right across the year and use that from December onwards. And that could really concentrate water use within the Murray and add to those pressures in delivering water through the Barmah choke. That's the outcomes. Then I wanted to show you the flow-ons from that, what these different options mean for trade opportunity. This is a graph that shows you in the bars the volumes of net trade from the Goulburn out to the wider Murray, so both Victoria and interstate in each year. The lines on it show the volume of trade under our preferred option. So the first one there with pulses at around 3,000 megalitres a day, we'd expect on average about 130 gigalitres a year of new trade opportunity from the Goulburn to the Murray. Lifting the pumps so that you could have higher pulses means you could deliver more water and means you could increase that trade opportunity potentially to up to closer to 200 gigalitres a year. So you can see how that compares to the historic averages. Again, it's quite a bit more than many of the, well, comparable to recent years, more than some of the history stuff further back, but not as much as those record years we saw in 1718 and 1819 when we really saw that environmental damage. So look, many of you are probably well aware of the factors that driven this. This graph just shows the volumes traded from the Goulburn. People in the Murray actually sourced water from various places. The drivers behind that, prior to 1314, at the time, we're seeing a lot more water used in the Goulburn. You saw in some of those years, as this graph shows, back trade into the Goulburn system. It's been drier a bit since 1415. Those first few years it was dry in Victoria. People were trading in to the Victorian Murray downstream of the Barmah choke, but people were sourcing more of that water from New South Wales and other places. And then really in those couple of years, 1718, 1819, with the drought in New South Wales, Victoria became for the first time in a while a net exporter to New South Wales. And so that water traded from the Goulburn was much greater, and it wasn't just going to Victoria, it was also trading out to New South Wales. We've seen it drop back. Last year it was about 150 gigs of net trade out of the Goulburn. This year to date, it's been about 60 gigalitres a year. Just to show you as well, so the outcomes under those different options we talked about in the RIS, and again, why they're not recommended. The green line at the bottom shows what the trade opportunity would be under that lowest option for environmental flows, sorry, for operating rules in the RIS. It is about 60 gigalitres a year of trade opportunity, so less than half of the trade opportunity you would create under our preferred operating rules. That is the economic trade-off in that one for those additional environmental gains. That's why we are not recommending that one, because we think we can get most of those environmental benefits with a smarter operating regime. The one with a higher standard base flow and more frequent pulses, that's the red line. That gets you up closer to 190, but with significant environmental costs. So we think we could get all those benefits and a bit more just by moving those pumps and being a bit smarter about how we operate. I'll just talk you through how that, how we get to 130 and how you can expect this preferred trade rule to work in practice if that's the outcome of the RIS. So I'm just going to use a couple of example years here to show you how it works. Firstly, I'll use 1819. That was a year with full allocations in the Victorian Murray and in the Goulburn. That rolling limit for the first part, as we said, is based on an IVT balance of 190. There is 140 gigalitres of those legacy commitments that we'll set aside at the start of the year. So the first thing that would happen in the future with an IVT balance, if we can draw it down to zero the year before, you'll set aside that 140, there'll be another 50 gigalitres of trade opportunity at the start of the season. The IVT balance is at 190 then, through winter, spring, as water's called out by river operators under that rolling part of the rule, that will create more trade opportunity. We've been working with river operators to think about how they can deliver that water in a way that aligns when the water's used. And we think on average, they can deliver about 80 gigalitres through that period up until mid-December. So that extra 80 gigalitres of trade opportunity will be created between July and mid-December. From mid-December, we then need to cap it off and say, make sure no more then effectively 190 is owed to the Murray for the rest of the year, because that's what can be delivered. So in this case, because we're at 190 and because it's full Goulburn seasonal determinations and we know we need to deliver all that legacy stuff, there will be no more net trade opportunity from that point. Doesn't mean you can't trade. If there's back trade back into the Goulburn, you'll be able to trade that back out like other rules. To show you how seasonal determinations affect this and the flexibility around this legacy stuff, I'll just use the example of last year, 1920. So that was a dry year in the Murray and the Goulburn. Goulburn seasonal determinations only reached 80%. Start of the year, similarly, we'll still reserve space for that full 140 of legacy stuff in case we need it. The 50 will still be created at the start of the year. Up to 80, maybe a bit more, will be created as river operators deliver water. By December, the resource manager with their seasonal outlook will have a pretty strong, clear indication of whether we're going to get to 100 or not on the Goulburn. Knowing we're only likely to get 80, we won't need the full 140. We'll be able to free up an extra of trade opportunity, 20 gigs of trade opportunity in that dry year. So the net outcome there, a bit more trade opportunity announced in mid-December, total trade opportunity more like 150 than 130 in those sorts of drier, low allocation years. To summarize what that means in simple terms, the net outcome of this, we think we can manage this so that delivery risks in the Murray will not increase because of trade from the Goulburn, and that's important for Murray entitlement holders. We think the trade volume that will be possible will be similar to many recent years post the basin plan trading was really kicking in 2014, but in reality, a bit lower than it was in those record volume years of 17-18 and 18-19. We think trade opportunity will generally be available earlier in the season than we've seen recently, and with a bit more in the long term, a bit more certainty around when that will be available. And in those dry years with lower allocations in the Goulburn, a bit more trade will be enabled as we don't need those full legacy commitments in those sorts of years. And we are going to further investigate moving these lower Goulburn pumps, and that will mean more trade opportunity may be enabled in the future. That's important given all the changes in the basin and the reliance on the water market for many people. I'll try not to spend too long on the Lower Broken Creek, but I know there will be some people who will be interested in it. So again, I'll just touch on that. Here's where it is, for those of you who aren't familiar with it. It's actually an extension of creek that runs off the Broken River, but it's been brought into the regulated system. Most of the water to it in practice and the entitlements in it are supplied by delivering water down either the East Goulburn main channel primarily and a little bit from the Yarrawonga main channel in Murray Valley. It sits effectively between the two systems, so we need to get the rules clear for it. So again, where we want to get to, we think the Lower Broken Creek needs to be subject to the same because it's considered part of the Murray system. And if you let allocation trade into it from the Goulburn without restriction, you could then trade it out. So we don't want it to become a loophole. We want to look at giving those eligible customers that still hold Goulburn entitlements the chance to exchange them across to be like everyone else in the creek holding Murray entitlements and allow them to use it. We do also want to look at a specific tagging restriction that's a bit different from the wider Murray. And that's because the water delivered to these guys can be delivered down the East Goulburn main and not down the Lower Goulburn River. So in terms of final outcomes for allocation trade, means that that will be restricted in line with the Goulburn to Murray trade rule, both through winter and spring and summer and autumn. Tagging outcomes, the preferred option would say that they could effectively use through that winter and spring period without restriction, obviously subject to how much can be delivered down the East Goulburn main and within their delivery shares. From summer and autumn, that would be restricted in line with everyone else in the Murray. The last key bit we wanted to mention is the other key bit of thinking that we need to talk about in the RIS is how we transition towards these arrangements. The rules we've talked about are really being premised on being able to draw down the IVT account each year and start each year anew. That's not the reality of where we are now. It's not going to be the reality of the first year we bring in these changes. The IVT balance is currently around 200 gigalitres. Last year it finished the year at about 150, 160. We're not sure where it will end, but we know it's not going to end at zero. So if we go into the first year with the rules proposed and this higher IVT balance will get very different outcomes than you'd expect in the long term. And we need to make sure we think through how we manage a bit of flexibility for trade opportunities and mitigating delivery risks while we work through that. So what we think that should look like in practice is starting to move towards transitioning these rules in from 1 July 2021. So that would be making the tagging restrictions permanent, introducing this quarantine facility for the legacy commitments, introducing that rolling limit for the first half of the year, but rather than capping it off in December, letting that run for a bit longer in the first year. And that will be critical to allow a bit more water to be delivered and a bit of trade opportunity to open up once you've worked down a bit more of that IVT balance. The long term will be mid-December, the short term, probably more like mid-Feb. If you capped it off in December, coming in with such an high IVT balance, you're likely to effectively see zero trade opportunity in the first year. We think that's potentially a significant market shock, and it's hard for people to deal with and will make it hard for the market to adapt, going from the past to something that's very different in transition, something that's different again in the long term. We think keeping that rolling limit open until February could allow 60 gigalitres of trade in the first year. Could be more if the IVT balance gets drawn down more this year, but much less of that shock and market impact. And in terms of transition to operating rules, the other risk is if we go in with a much higher IVT balance, but we're a bit hard-coded about those operating rules, we'll have much more water to deliver than we can fit out the river. We think there's flexibility to respond to that. We would like river operators to plan for operating within those rules, but keep a bit of flexibility, obviously, to work closely to us as if we do see delivery risks emerging, because we're still working through that high IVT balance. We'll work together to mitigate those risks and go above if we need to until we get to the stable long-term arrangements. Last couple of slides for me, and I'll give Rob a chance to pass on some questions. Conscious I've done a fair bit of talking, sorry, but public consultation, as I mentioned, COVID retaining permitting, it's going to be a mix of face-to-face stuff in smaller groups. It's not quite going to be like the past with town hall meetings, but we're going to be doing a fair bit of getting out and trying to talk to people directly. And it's going to be sessions like this, online, publicly open, and some targeted ones, and probably also some drop-in Q&A sessions where people get the chance online to ask us questions face-to-face. Rob has very kindly hosted us for this one. Obviously, there's a fair bit of overlap, so that's worked out very well with the release of the RIS. This one, I think, as Rob mentioned, is going to be available publicly through recording as well. We're going to be running a series of our own as well over the next 5 to 6 weeks through March and April, if people want a chance to come along to another one or join one of these Q&A sessions. So all these links, there's an email at the bottom. You can email us to register, but that's all on our Engage Victoria website and on the Water Register website as well. The plan at the moment is to run that consultation through until the end of April. There's a chance to make submissions to that through the Engage Victoria website. Folder summarising what we've heard, people's key concerns, where they think we should go, make that publicly available and use that to support a government decision. Our intention is for that in June, so we can start to transition towards long-term arrangements from 1 July 2021. We think in the long run, we need to start to bed this down. We don't want to drag it out. Definitely want people to have some certainty for the future. The link there, this stuff will be available afterwards, and we'll publish it. All this information is available on the Engage Victoria website. The regulatory impact statement itself is there. There's a range of summary docs, both of the regulatory impact statement, but how we think the trade rule will work in the future, some examples of that, some summary stuff about the operating rules. There's some reports about the scientific assessment that's informed the operating rules, and there will be some fact sheets and other things. So plenty of materials if you want more information. I think that's it for my talk, so I might just flick to Rob to see if he's got any questions that he wanted to pass on.
Thanks, Joe. I think if you wouldn't mind just flicking back to slide 34, Joe, just that was a lot of information for people to take in. I think slide 34 summarises it quite well. So as you described, Joe, the grey bars there showing the volume traded, Goulburn to Murray in previous years. The yellow line there showing the preferred option. So at 130 gigalitres, which is, above what is traded previous to, I've got the evaluation question up on the screen. Yeah, but previous to 2017-18, but not as high as the previous few years since 17-18. And then if the pumps on the lower Goulburn can be lifted, there's the option of trading 205 gigalitres per year, which through the Goulburn, which puts us up with trade volumes through the Goulburn in the last few years. So that sort of gives you an indication of potential future volumes that will be able to be traded through the Goulburn. Have got some questions, Joe. Water flows down the lower Goulburn all winter and spring. Why does this flow not reduce the IVT balance?
Yeah. So, look, good question. Currently, generally, the way we operate the inter-valley trade accounts is river operators in the Murray only call on that water when they think it's most useful to top up the Murray system. So they often don't call it through winter and spring if they've got other ways to meet Murray commitments. We think in the long term, we need to make a bit of a shift there. And we think when water's traded from the Goulburn to the Murray and when that water's used, they should try to deliver that in line with when they expect the water to be used. And that effectively means the Murray will be no net change as a result of trade from the Goulburn, because trading, it's being used and you're delivering it at the same time. So we think a key part of this as well, and why we're talking about 80 gigs of additional trade opportunities, a bit of change in thinking there and starting to deliver water from that Goulburn IVT account in line with when water's used. So I think in future, the key thing you will see here is a bit more delivery from that IVT account than you have in many recent years through winter and spring. And we think in the long term, that's probably good outcomes both for trade opportunities and a bit of sensible thinking about how we run the rivers, more in line with where the water is actually coming from and slightly more in line with natural conditions in the Goulburn.
Thanks, Joe. Another question here, and going back to the start of the presentation, more about delivery risk, but the sharing of channel capacity with New South Wales, has Victoria overreached, and how is the dialogue done?
Yeah, look, so we're working with both New South Wales and South Australia on these wider delivery risks question. We do agree that in the long term, we need to find some common ground on how we share capacity in the event of a delivery shortfall. To be honest, I think there's still plenty more to do there. Governments are a bit apart. We're still a bit apart in understanding the problem, what contributes to it. That's part of why we've been doing some of this key base work to understand all the factors that are contributing to delivery risks, and really that some of the things that are really driving this are some big joint ones around what's happening with channel capacity at the choke and what's happening with the Darling, and therefore we all need to be part of the answer. And I think we all need to be at the table to think about what that means for our entitlements. That's entitlements in New South Wales, in Victoria and South Australia. So I do think it's not necessarily also just about New South Wales and Victoria. We're all just trying to deliver water under the rights to water that each state is allowed to use, and we need to work hard to get towards a fair and sensible outcome. As I said, that's not to say we're that close to solving the problem. I think there's a fair bit more work and collaboration that needs to go on with governments to get to that point.
Thanks, Joe. I'm just aware that it's 2 o'clock, so people are busy and no doubt got other things to do. So if people would like to leave, obviously you can leave, but just, and I'll just wind it up. But if it's okay, Joe, we might continue for anyone that wants to hang around, just with with further questions. We have got some more questions, but
Yep.
before people leave, I'm sure they would like to thank you for a great presentation. It is a lot of information on a very complex subject, and was presented as simply as could be done. So thanks very much, Joe, and thanks to the efforts of you and your team, for all the effort that you've put into this, into consulting the broader community, and your efforts to get it right. It is appreciated. So thank you. Thanks also to John, who's been working behind the scenes with technical hitches. And just a reminder that our next, we will have another webinar late April, and it's about securing your water in the future for next year and beyond, with a focus on carryover water and other water products to capitalise on the lower water prices right at the moment. So thanks, Air. Feel free to head off. Another question, Joe, just about changes to the Barmer choke. What information is available on that, and what effect is that likely to have on the price and availability of water?
Yeah. Look, so on that, along with that managing delivery risks report that government's published, we've also been working on a range of technical reports beyond that, and some of those include investigations of what's going on at the choke and with choke channel capacity. So we can make some links available on that. There's some further reports on the MDBA website about all the investigations they've been doing as to what's going on with the choke. So there's certainly plenty of information you can read there, and there's more work we'd like to do to try and understand the future trajectory of that. Look, in terms of availability and price of water, I think in reality there is already a trading rule that applies through the Barmer choke. There's no net trade from above to below the Barmer choke. That rule is there to manage delivery risks. The default is it's in place. It's only ever really relaxed in those drought years when you've got less water you need to deliver. That rule will continue to remain in place. So this is not necessarily going to result in more trade restrictions than there already are, but particularly if the capacity of the choke continues to decline, we'll need to think about all the sorts of things that need to be done. So I'm not sure the choke itself will necessarily result in different outcomes for the market, given that choke trading rule is in place. I think probably some of the longer term questions is under a drier future and lower water allocations, what that more so might mean for the market, etc. But yeah, with the choke trade rule in place, I don't think the capacity of the choke itself will fundamentally result in much different outcomes for where people can and do trade from.
Thanks, Joe. Another question about the Goulburn to Murray trade, just about why we're trying to increase trade out of the Goulburn. If we're trying to increase it, shouldn't there be consideration and accounting for transmission losses, which the buyer should have to cover?
Yeah. Look, so I think maybe to answer the first part of that, again, our objective is not to increase trade for the sake of trade, but it is consistent with the principles that we've always been interested in under the National Water Initiative and Victorian legislation and the Basin Plan, to enable trade wherever we can, where it doesn't cause environmental impacts and where it doesn't cause impacts on third parties. So the first point, this won't necessarily result in more trade than we have historically. If anything, it will see slightly less than in those record years. The question about losses, look, at the moment, we assume that on balance, trade to and from, we can deliver that without significant additional losses in the system. And we think the merits of not complicating trade with that additional factor outweigh the benefits of trying to itemize losses on every bit of water trade and track that through the system, which will come with market costs. And there's a couple of reasons for that, right? It's very hard to put your finger on exactly how much losses are. They're very variable through a range of a whole lot of other factors through the system, not just where water is traded. But also when water is traded, there were losses associated where you delivered it in the first place. You might incur some loss in delivering it somewhere else, but in terms of net outcomes, it doesn't automatically mean that you've got more loss than if you'd had to deliver it where the water started. So there's a bunch of factors in that. Ultimately, still, we think that the philosophy at the moment still holds until we get compelling evidence otherwise, that within the trade volumes we allow, we don't think there's significant difference in net loss outcomes. And we think that we can enable trade without that extra complexity. Obviously, it is an interest that people have a lot of interest in, understanding in the long term what's happening with losses in the whole system, with changes in where water is used. We think that is something that's important to keep understanding, and we need to keep building our knowledge base on. But we don't think there's necessarily a course for change and a clear evidence to indicate that we need to change what we're doing at the moment, particularly as we're talking about for the long term, not more trade opportunity from the Goulburn River, if anything slightly less than in the recent years.
Thanks, Joe. There's one here. Can you explain how the IVT balance resets at the start of the water year? Will there be 190 gigalitres available for IVT transfer at the start of each water year, less any exchange rate traded?
Yeah, that's the intent for the future. Like if I just take a step back, the IVT account itself is a continuous account. So once water's owed to the Murray, we don't wipe that at the end of the year and pretend it's not owed. But the reality at the moment, the way the trade rule works, people can keep adding more water to the IVT account as long as it's below 200. So the outcome of that is in recent years, we've been coming into the year with very high IVT balances and it's hard to get it down. Our intention for the future, the way we've designed these rules, is to create the conditions whereby river operators can draw it down and effectively get it at or close to zero by the end of the year. So that will, as the person says, means if you come in with a zero balance, you can work up to that 190 gigalitres from the start of the year. The first part of it will be reserving it for that 140 gigs of legacy quarantine, legacy commitments until December, when we can be certain whether we need all of that or not. But yeah, if we can get these new rules in place, start operating this way, we think we can get it down more commonly at the start of the year. You will have that freedom within the 190, less the legacy stuff, to start creating more trade opportunity at the start of each year.
Okay, just another one, Joe, about what's involved in lifting the pumps on the lower Goulburn, and how likely is that to happen?
Yeah, look, there's a little bit of uncertainty about how many pumps and how much cost and the complexity involved. And really that is mostly because we need to actually validate the level at which those pumps get inundated and understand exactly how many are in that range of inundation between 3,000 and 6,000. So we've actually just secured some money from the Commonwealth to do a proper feasibility study, to go and look at all those pumps, do some costings of what would be involved in the approvals and the works to move them to the bank. And we think we'll have a much firmer handle on those long-term costs down the track. We do think ultimately this is a good outcome for the pumps holders themselves and for others. It will give them, it will remove some of the risks and inconvenience they have at the moment. At the moment, if there are higher flows, particularly if you get a big rainfall event in summer, either they've got to go and move their pump, or if they can't, their pump will be underwater and they'll have to sit out of irrigating for a while. So we think generally this is probably a better outcome for them and for others, and we think it is something that is achievable. There's certainly a lot of interest in doing it from people who are interested in trade because of the beneficial outcomes that could provide. But we do need to do that full feasibility study. Challenges there will be in moving them, etc. But we've heard pretty clearly from a few people that we should get on with that work to really understand the problem, how much this would cost, how to go about it.
Thanks, Joe. There's a question here about the Menindee Lakes. and the reasons for reduced water in the lakes that are acknowledged by the Vic government, and what the Vic government is doing about it. That it's putting pressure on the Murray, that's similar to the Goulburn River, and and um, and how it's impacting on southern irrigators' allocations.
Yeah, look, we're certainly very interested, and we do want jointly governments to focus on this. We want the MDBA as the regulator, I think, of compliance on our behalf and everyone's behalf, including people in New South Wales in the Southern Basin and South Australia, to have confidence that caps in the Northern Basin are being complied with. We want confidence that's what's being talked about in New South Wales with codifying and bringing floodplain harvesting into their entitlement framework is clear and appropriately recognises, I guess, historic use within their cap, which they're allowed to do, but not more than that. And that's all about making sure that the flows that should get through from the Northern Basin within the caps that have been in place for quite some time do continue to do, and that shared resource that makes it into Menindee continues to be available. So look, the reality is we are a little bit at arm's length, and we are reliant on joint commitment to this stuff, and we are, you know, reliant on the agencies we appoint, including the federal government and the MDBA, to make sure we are all confident that things are being complied within the Northern Basin and the flows that should come through are coming through. The other key thing I'll just mention, just on a slightly different note, Rob, is the other key change that's part of the joint government discussions around Menindee Lakes is, many people will be aware, it is one of the potential proposals for a sustainable diversion limit offset project under the Basin Plan, which we're all interested in. If we can operate them more efficiently, save some water, deliver better environmental outcomes with less water, that's a good thing for everyone. However, in doing that, we will be making sure that we're confident that if those are reconfigured the way they are, does not result in reduced water availability or water delivery security outcomes for Victoria and the Southern Basin as well. So that's another key one we're keeping an eye on as the Basin Plan rolls out.
Thanks, Joe. That's all that I've got in terms of questions that have arrived in my chat box. I'm not sure if you or John have got any more questions.
No, I don't have any more than what I'd already sent to you, which you've read out.
Thanks, John.
No, I don't think so, Rob. None more that I think have come directly through to me. Hold on, let me just double check that. No, I think we've covered all of that. There was that question, which I think we probably answered, about the volume of legacy commitments. Just in case we didn't, I'll just touch on that one. That is up to 140 gigalitres, and that's made up of a couple of things. 40 gigalitres of that is part of how we historically recovered some water to put some more water back in the Snowy River. So there used to be, of the water we recovered for the Snowy River, 40 of it, rather than delivering it from the Snowy into the Murray, we've kept that water in the Snowy to improve environmental outcomes in the Snowy, and we made some water savings in the Goulburn, and we delivered that water to the Murray from the Goulburn now to make sure the Murray's not worse off. So that's 40. The other 100 is a result of how we used to manage trade. 15 years ago, if you were an irrigator in the Murray and you bought a Goulburn entitlement, it became a Murray entitlement. And to make sure that Murray wasn't worse off, we created these legacy commitments from the Goulburn to the Murray to deliver that amount of water to the Murray system. And there was, before we changed the way trade was managed in 2007 to more accurately reflect where the water was coming from, there was in total about 100 gigalitres of that trade. So those two things, 100 of that, 40 to do with Snowy, up to 140 gigalitres a year of legacy commitments. But that's the last one from me, Rob. So I would maybe just add to that. I think just further what you said before, thank you very much for having us, and thanks for people to come along. It has been a really good opportunity. I am conscious I talked a lot, but hopefully people got a fair bit out of it. And we do have these further ones down the track and people to read. So even though you probably heard me a lot, it's a good indicator where to go and look if you want to understand more. There's plenty more sessions if you want to come back. If you want to get in touch with us directly, I've got a really good team of people working for me on this. There's a bunch of people doing a lot of useful stuff, so we can get back in touch with you if you have further questions. We're more than happy to talk about it. But yeah, thank you, Rob and John, once again for putting this on. It's been a really good opportunity.
Thanks, Joe. And just a reminder on your slide, Joe, I think it was the Engage Victoria website that you directed people to for more information.
Yeah, the link is there at the bottom. Basically, if you just go to Engage Victoria and search for Goulburn to Murray Trade, you'll find it. That's the easiest way. That's the Victorian government website where all public engagement, we centralise materials so people can find in one spot. So yeah, just Google Engage Victoria, type in Goulburn to Murray Trade and you'll find all this stuff.
Thanks very much, Joe. And just reminding people that if they could complete the evaluation poll that came up on the screen, that would be much appreciated. Thank you. So thanks again to Joe and John and to everyone for joining in and contributing. And I hope you have a good afternoon. Thank you.